This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, April 8th, 2015. Euro dollar. So the euro right now is caught between key levels and mid-range between 10.53 above and 107.13 below. A break back above 10.53 would suggest that the current correction that we've seen off the recent 12-year lows going back to the 13th of March is going to continue, and fresh upside could be seen towards the 112 to 113 area. However, inability to take out 10.53 could suggest a lower top is in place at that level ahead of a bearish resumption below the recent range lows that we saw at 107.13 and back towards that 104.62 12-year low that we saw on the 13th of March. So right now it just comes down to wait and see, looking for either a break back above 10.53 or below 107.13 for clearer directional insight. Sterling dollar. So cable continues to consolidate off its recent 146.35 multi-year low, and the downtrend remains firmly intact here, with only a break back above recent highs at 51.65 to delay the outlook. Right now, a lower top is sought out at 51.65 ahead of the next major downside extension below 46.35 and towards psychological barriers at 140 further down. Ultimately, only a break back above 155.50 would compromise the bearish outlook for cable. Dollar yen. So dollar yen has mostly been consolidating over the past several days, though the market remains locked within a very well-defined uptrend and is favored to break above the recent 122.03 yearly and 7-year high towards the 125-130 area further up. At this point, any setback should continue to be very well supported ahead of 118, while only back below 115.55 would compromise the highly constructive outlook. Euro Swiss. So Euro Swiss has been showing signs of support around the 104 area, and the market retains its recovery outlook while it holds above this level in favor of a retest of back towards the 108.15 area and beyond. At this point, only a close below 104 would compromise the recovery outlook and open the door for deeper setbacks towards parity. Aussie dollar. So Aussie dollar has done a good job of being supported in recent sessions after trading down to a fresh multi-year low at 75.33 back on the 2nd of April. However, the market is still locked within a well-defined downtrend, and any upside is classified as corrective in favor of the next downside extension towards next key psychological barriers over the medium term at 70 further down. At this point, only a break back above 79.38 would compromise the bearish outlook. Dollar CAD. So dollar CAD remains locked within a bullish consolidation over the past several weeks, with the market being supported above 23.50. At this point, fresh upside is seen towards through the recent 5-year highs that we saw back on the 18th of March at 28.35 and towards the 130.65 2009 peak further up. Only back below 123.50 would delay but not negate the bullish outlook. Kiwi dollar. So Kiwi has been locked in some choppy consolidation in recent trade, although overall the broader downtrend remains firmly intact, and the market is expected to trade back down towards the 71.76 yearly and multi-month low and towards 65 on a break below there further down. At this point, only a break back above 78.90 would compromise the current bearish outlook. S&P 500. So the SPX 500 has recently stalled out in February at record highs at 2120 and is showing signs of a material top. However, a break and close below 2040 will be required to confirm this outlook and accelerate declines in the sessions ahead back towards and below key psychological barriers at 2000. Gold. So gold has done a good job recovering out from those recent, after stalling ahead of those recent 2014 lows at 11.31, and the market is now looking to establish a longer-term base, although a break back above the 12.23 high, a close above the 12.23 high from the 2nd of March will now be required to strengthen this outlook and open the door for additional gains. At this point, though, only back below the recent low that we saw at 11.78 from the 31st of March would delay or take the pressure off, the immediate pressure off the top side, and put the pressure back on the downside towards 11.31.